Hello and welcome to Atlas Pulse TV. Today in the studio I've got my dear friend Adam Cleary. Now he's the Chief Executive of Cavenham Capital. Now Adam's actually world famous because he was the first person in the history to manage to put gold onto the blockchain. Welcome Adam.
Thank you. Nice to be here.
So you discovered this space, the digital assets, Bitcoin and so on in 2013. 2014 you were the first to get gold onto the blockchain. So why were you inspired to do that? You know, why at that time did you think that rather than just go with the idea of digital assets, you thought, well, let's just lock it down to gold?
Well, I think that, you know, blockchain, Bitcoin and gold seem to me to be a marriage made in heaven. Effectively, Bitcoin was described as digital gold and sort of very much modeled on a sort of form of gold. And I thought that gold could be a good physical counterpart for Bitcoin, a good bridge to the physical world, to the real world. I thought that it would offer us a way to interact and exchange with the real world, to build a bridge, as it were. So
you thought that you know that there was this fast-growing space at that time. The price of Bitcoin was banging on the door of $1,000, wasn't it, in 2013? And it was you know there was huge media interest at that time, wasn't there? And people were a bit confused by Bitcoin, if I recall, because they expected it to be money in the retail sense, and it didn't appear in many places. And I think that confusion sort of has passed now, hasn't it? But you thought that the way to interact was with gold because you didn't think that the fiat monetary system or the banking system would be happy to interact with the Bitcoin infrastructure.
Exactly. I've been surprised by the extent to which Bitcoin has been able to integrate with the existing system, and I was wrong about that. I thought that would not be encouraged or permitted or tolerated to the extent that it has. And I also misunderstood, I think, the way that gold effectively does not lend itself to being open and permissionless in the way that Bitcoin does. And I should have I should have thought more closely about that. But I think it was a conservative attempt to try and engage with the space, and a bolder attempt would have been better.
Yeah, well, let's stick with the comparison of gold and Bitcoin for the time being, because I think it's quite an interesting one. You know, it's been written so many times, and of course, as I've written in Atlas Pulse, that they're similar on the supply side, but of course, on the demand side, gold is just anchored to long-term store of value, and on the demand, for Bitcoin, it's really about the number of people that use it that dictate its value. So the question for you is, you know, we've got this terrible, dangerous situation on the Korean Peninsula, and there may well be a nuclear strike. Now, I'm sure there won't be, and I really hope there isn't. But if there were, then you know a few cities would be knocked out, lots of people would die, but the majority of the world would carry on. So there would be economic devastation, and there'd be a freeze in world trade, let's say. People may even be evacuated from the cities, and the people who use Bitcoin tend to live in cities. So the question is, what do you think would fare best as an alternative asset, gold or Bitcoin, under some sort of terrible military scenario?
Well, I think you would want to have both, because obviously gold is completely physical, well, physical gold is, and does not rely on electricity, so you would continue to own it even if there were no electricity, no power, no internet. So it would continue to have a historical store of value function in that scenario. Bitcoin, I think, would continue to exist. Nodes would continue to function in places where the internet was not down, and indeed we have a node now in the sky, Blockstream satellite. So there's a node out in space for Bitcoin. So I think Bitcoin would also continue and would be very valuable because of its open, permissionless, decentralized nature. I would expect, you know, society to default in a way to the Bitcoin as a transfer of value in that doomsday scenario, as long as the internet stays up.
Well, the internet's going to stay up, isn't it? Because we're talking about losing a few cities here. We're not talking about devastating the whole world and life on Earth as we know it. And I think that's a much more realistic nuclear war scenario than total devastation.
Yes.
And there are many thousands of nodes out there. I think you said there were 9,000 to me earlier. And maybe a few get knocked out, and the internet might have some trouble in some areas, and 3G might have, or 4G might have some areas, a problem in some areas. But basically the system will carry on working throughout that kind of stress scenario. But I'm just wondering if people are going to use it during the stress phase, where people have evacuated the cities and the economies ground to a halt. I have no doubt that digital assets will resurge after the war, but during that phase, I suppose that's the real question.
I mean, I think it will preserve in its role as a store of value. I believe that will be preserved. Activity may diminish, but I think it will continue to operate a valuable role in that sense. So I believe it would still be used. I really can't say to what extent, depending on economic activity, as you say.
Well, of course, it's not going to happen, so let's not worry about that too much. But I think it's an interesting question because it kind of helps you to understand the difference between these two things. Because people like gold because of this end of the world scenario. So I think you've got to express Bitcoin in that context to try and make the comparison, the fair comparison. But closer to home, right here, right now, Bitcoin's just a high growth asset and its friends. Yeah. But you're a big fan of Bitcoin rather than its friends in the space.
No, I think I'm a fan of the whole space, and I would make the distinction that Bitcoin is the giant on which, and we're building on the shoulders of the giant. So Bitcoin, for me, is the reserve currency of the space, the original asset that was mined into existence. It was never sold, it just appeared. It was created effectively out of thin air, if you like, out of the ether. And everything that comes from it is built on top of it and sort of owes a debt to Bitcoin. And so I think I would make that distinction. But I wouldn't say that we will not evolve in just the way that Bitcoin has emerged at this time of our evolution. Something else may emerge, and indeed protocol coins like Bitcoin and Ethereum may not be necessary forever. We may simply move to application tokens, and which are ways of interacting directly without an underlying protocol. I don't know if that makes sense.
Well, I think you've probably lost half the audience there, Adam. But let's try and break down what you've just said, because I think that's all right. It's all right. It's a complicated space. It's what puts a lot of people off is the fact that you've got to know what happens inside a computer to truly understand what's going on. And even if you understand computers, you've got to understand cutting-edge mathematics. So not many people in the world who understand both of those things too well. But essentially in the blockchain, we had a problem a few months ago because they ran out of capacity in Bitcoin. It was a 1 megabyte limit. They implemented SegWit, which is this idea that you can build things on top of the blockchain. But now there's a possibility we can have infinite transactions, can't we? Because of this ability to build on top of that. So essentially, if you think of Bitcoin now as an app store, where people can just develop on top of this form of money. That's roughly what you're saying, isn't it?
That is exactly what it is.
Yeah,
yes,
in sort
exactly. Yeah.
Slightly layman's terms, if you like.
No, that's a very good description indeed.
Well, I think I've just probably offended all the people who actually understand the real thing. They're probably pulling their hair out. No, it's not an app store. I can see that going all over the place. So, but this year, what's been in the real change has been the ICO market, hasn't it?
Indeed, yeah.
So that stands for
initial coin offering. So effectively this year, ICOs have just exploded and have burst onto the public consciousness. So this year to date, we've had 2.16 billion of ICOs issued, according to crypto-compare.com, which is an excellent source of information, by the way, for anyone who wants to look at that site. And 2.16 billion. Overall ICO volume has been 2.2. So prior to the beginning of 2017, the number of ICOs was extremely limited. There were a handful, basically, one in 2014, a few in 2015, a few at the end of 2016. Almost all the action has been this year. And the ICO market is just exploding in terms of the issuance of these tokens of utility that people are using to build private networks, private software applications, open source software projects.
Right. So let's just differentiate between what's normally being referred to as a coin, like Bitcoin, Ethereum, and so on, and one of these tokens that's coming through the ICO market, which are kind of private blockchains, if you like. Not exactly blockchains, but private networks that can interact with the space.
Yes.
How would you what's the difference between them?
Well, as I say, in my view, Bitcoin is a currency. Ether is
a currency, Adam?
No,
it's an asset.
It's definitely a currency. No, yeah. Ether is a sort of protocol and a currency for operating within that protocol. And tokens effectively allow you to buy usage within a scarce private network. So that you can use them to access the functions of a scarce private network.
Great. Can you give me a good example that the normal people would understand of what one of those things would be? Because a lot of people have been criticising Bitcoin, saying, well, it's just a Ponzi scheme, it's a bubble, it's a mania, but it's not useful. But it is useful.
Yes. I mean, it is useful. One token that was issued, which I think has a lot to say for it is Basic Attention Token, which was issued by Brendan Eich, the creator of JavaScript. And I think Basic Attention Token tries to address this idea of our attention when looking at the internet, and the idea that you're constantly bombarded with people trying to get your attention for an advertisement or whatever, and you are completely unwilling to do this. So with this token, the idea is that people get paid for their attention. You give your attention to something and you receive tokens. And that creates a sort of internal network effect, if you like, where people want the tokens because then they could spend it on consuming content by content providers. So if you want to buy a subscription to something, you can use the token for that, and you can receive the token because you've watched a video or an advert or filled in a survey or something like this. And this is built into this browser, which Brendan Eich created, the Brave browser. So within the browser, the token is inbuilt. And these tokens were issued as an ICO, and it was a roaring success, and they raised 36 million in about 30 seconds. And I think that is a good example of a token that is valuable, that has value, that funds an open source software project, because it's hard to see this token being funded in the traditional private shareholder model.
Yes, because there's no sort of board of directors, there's no P&L, there's no interaction with the fiat monetary system and so on. And the reason why that could easily work, I mean, from an economic point of view, is that what we've observed in this space is if you create the network and create a velocity, and you spin those blades of the helicopter, the price rises.
Yeah.
And so then the more the price rises, the more people want to watch those adverts and
Yes,
that content and so on.
Yes.
And so it's self-fulfilling
Yes.
in that sense. So that's a good example.
Value comes from the network,
Sure.
basically. And participating in the network creates value out of thin air, which is an amazing thing, if you like. Because historically, when you create money, you effectively create a sort of scarce thing, and then certain people tend to hoard it, and it's distributed in a very mealy-mouthed way to the rest of the world. In this sense, the participation in a network is a way of distributing money. And this is, I think, a little understood effect of tokens and cryptocurrency, is that it dramatically changes the way not only in which we can create money, but in which we can distribute it.
And I think because of the network effect, you kind of, does that make people want to hoard the stuff, or does that make people want to spend it? I mean, hopefully, if people spend money, then it's kind of more useful than if people hoard it, isn't it? In terms of, it's better spreading it out.
In any situation, I'm not in this camp that says hoarders are bad. Hoarders serve a very useful purpose because they give things value. And hoarding in gold, I would argue, is useful. Hoarding in Bitcoin is useful because it creates and maintains the scarcity of the asset, because people are seeking to save. And I realize that this is heresy in the current world. Saving is heresy. But it's a natural human instinct to want to save for the future. For as long as we don't know when we depart, it's natural for there to be a saving function. And hoarders are simply expressing this natural human preference.
In the case of Bitcoin, if everyone was hoarding, then the system wouldn't work. If everyone was spending, the system wouldn't work. So there's a neat balance between the two.
Exactly, which is expressed in the price.
And that's the free market for
And that's the free market.
And of course, the number of buyers and the number of sellers is always exactly the same.
Exactly, yes.
Which a lot of people struggle with that one.
They do.
But you need to think about that, because it really is true.
Yes.
And I'd like to just finish off on a little bit of macro. So, gold and Bitcoin are off-grid assets to some extent. They're outside the financial system, in the conventional financial system. What is your main criticism of the financial system as it stands, and why do you think that these tangible assets are the place to be?
Well, I mean, the criticism of the financial system is that it's been bankrupt since 2008. And we're just pretending that it's not. And the
which bit of the system is bankrupt?
The entire system is bankrupt. Because, at zero rates, the entire system can be pretend maintained forever.
Surely parts of the system are bankrupt, not the whole system.
I mean, the entire system is bankrupt because we don't know the price of money, and therefore we don't know the price of anything, because everything is an intervention. Sure. And so we fix the price of money. We say, on our left hand, we're going to issue some bonds, and we're going to sell them to our right hand at 0.005. There we go, that's the price of money. No, it isn't. But that's what we fixed it at, central planning style. And all prices look to this price of money in terms of making decisions about production and consumption and distribution and logistics and everything. Everyone looks to this price of money that is being set artificially in order to preserve a system that is insolvent, right? So I cannot sort of understand how much longer we're going to sit here and pretend the system is solvent. And that's why Bitcoin was created. It's a response to the insanity of the existing system.
Perhaps. And you know, I'm glad you did that, because it's always fun when you go off against the system. But what I'd also like to say, Adam, is that maybe, just maybe, that we've colonized cyberspace and we've created this internet over the last 30 years, and this is it's created its own version of money and so on. So maybe the old world continues and it does work. Maybe it doesn't fail. I hope it doesn't fail. And maybe we just created a new world.
Yes, indeed. Absolutely. I agree. And in a way, just as gold forced the discovery of the physical world for, say, 400 years, Bitcoin can have the same role in creating digital discovery in the next era of humanity.
Yeah. Do you think that if Gordon Brown came back to the Bank of England, he would sell our national reserves of Bitcoins?
I don't think we have any national reserves of Bitcoins, and when we do, it's probably a time to do the opposite, because Gordon Brown, as we know, is not a very good trader.
Right. Well, that's a real shame that the Bank of England doesn't have any Bitcoins. Well, we don't know that. They just haven't disclosed what they have. You never know. You never know these things.
Right.
Well, anyway, ladies and gentlemen, thank you very much for watching Atlas Pulse Television. And thank you to my guest, Adam Cleary. And please watch out for the latest issue of Atlas Pulse. You can sign up for free on atlaspulse.com.